Welcome back to Business Week here on Horizon News. Last week, China and Brazil reached an agreement to settle trades in one another's currency. Over the past 15 years, China has replaced the US as the main trading partner of resource-rich Brazil, and as such, that shift may have been inevitable. But within the context of recent events, this appears to be another in a series of recent challenges to the central role of the dollar in global trade. As the world's reserve currency, the US dollar is essentially the default currency in international trade and a global unit of account. Because of that, every central bank, treasurer, exchequer, and major firm in the world keeps a large portion of their foreign exchange holdings in US dollars. And because holders of dollars seek returns on those balances, the ubiquity of dollars drives a substantial portion of demand for US government bonds, for instance. Now, the switch from dollars to a yuan real settlement basis in China-Brazil trade is only the latest in a growing trend. A conference in New Delhi, India last week focusing on increased cooperation between the BRIC nations, Brazil, Russia, India, China, and South Africa, touched on potential scenarios for de-dollarization. Just how fast is this wave growing, and what are the implications for the global economy? Well, still with me to discuss this very important issue is Bode Oshosami, a RISE business analyst. So welcome back again to you, Bode. What exactly is driving the de-dollarization trend, and how feasible is it really?
Well, the geopolitics certainly is the key thing, especially what we are seeing in the situation in Russia. Monetary complexities also have made the dollar less stable than like it used to be, and the different global repolarization that we're also seeing is causing many to question reserve currencies, also questioning the dollar as a default currency in international trade. The drivers of the de-dollarization have also heightened of late. According to the IMF, the dollar's share of global foreign exchange reserves fell below 59% in the final quarter in 2021. That's extending a two-decade decline. 25% of the shift out of dollars has been into the Chinese renminbi and 75% into other currencies. Like you say, China moved last week to one-based settlement in its business with Brazil. And the ability of the West to eject from the Society for Worldwide Interbank Financial Telecom System, that's SWIFT, countries, to eject countries like Iran and of recent Russia, is also leading more countries to have their contingencies in place. Russia launched two critical pieces of financial infrastructure. One was an independent national payment system that worked as a Russian alternative to payment platforms such as Visa and MasterCard. The other was a proprietary financial messaging system called, they're calling it the System for Transfer of Financial Messages, or SPFS. That's the Russian version of SWIFT. In December 2021, SPFS had only 38 foreign participants from 9 countries. As at last month, SPFS had over 399 users. Even Russian banks in Germany and Switzerland, the two most important financial hubs in Europe, have access to SPFS, and Russia is negotiating with China to join and use the system. The dollar also has been of late less stable, given all the monetary interventions of the Federal Reserve Bank, of course, the expansionary response of the 2020 pandemic, the outbreak of inflation reaching 4-decade high, and the shift to tightening. All this took its toll on the stability of the dollar. But you have to remember that the US dollar, is still the de facto currency in many countries and offers the cheapest means to invest in risk-free US Treasury investments. In terms of feasibility, clearly, there is going to be a lot of execution risk. The big question is, what will replace the dollar?
Yeah, very, very good question. What will replace the dollar? Now, looking at the attempt to de-dollarize, if you look at global trade flows now, when you look at tech companies, tech investments, for instance, a lot of that obviously is happening in the US. China is trading quite a lot with Africa and other parts of the developing world in emerging markets. Do you see this potentially, if it really becomes a thing and becomes successful, shifting global trade flows further in favor of the global south? Or, what might that dynamic look like?
Well, indeed, the fact that many countries are trading more with China than with Russia means that it makes sense for them to have more of their reserves, foreign reserves, in the Russian currency. And that is a huge driver to the de-dollarization. But, of course, we have to understand that the reason why people keep money in the US dollar is because the US economy is still considered to be the most stable. Corporate governance in U.S. markets is still considered to be of the highest standard. And the U.S. has the deepest and most flexible financial markets, the most transparent corporate governance, and arguably the least amount of discrimination between domestic residents and foreigners. So for the world to trust and accept, say, the Chinese currency, that would force Beijing not just to present the same benefits to foreigners, but give up capital controls, which looks unlikely. But there's an interesting link to foreign trade that you mentioned. You would recall that if you look at where we are now, there are huge existing trade imbalances in terms of you have countries that have huge deficits and countries that have huge surpluses. And the major economies with huge trade surpluses like Germany and China must acquire foreign assets in exchange for their surpluses. And the US and other similar deficit economies are the only stable, mature economies that are both willing and able to allow foreigners unfettered access, that is easy inflow and exit, to the acquisition of local assets. So in principle, yes, surplus running economies can accumulate amounts in other advanced economies apart from the US, but few are large enough and safe enough to balance more than a tiny share of the world's accumulated trade surpluses. And of course, developing countries are struggling because of the risks.
Yes, indeed. And the US has never been a country to take any threats to its economic prowess or dominance lying down. In a scenario where a significant number of countries around the world decided to move to a de-dollarized configuration, do you see any specific countermoves, either economic or in terms of new policies or criteria around investing in the US that may emanate from the US in a bid to neutralize the effect or impact of de-dollarization? And if so, what might that look like?
Well, my suspicion, Rolake, is that the US is confident that de-dollarization claims are exaggerated, requiring little need to make fundamental changes to their policies or to slow down the ongoing decoupling with the East, which of course is driving the dollarization. But there are three things they can of course focus on. They can ease tensions with China, which is of course the second largest economy, and encourage China to use SWIFT rather than switching to the Russian alternative system, instead of pushing policies that could lead to financial decoupling with China. If China goes out of SWIFT for any reason, of course, that's going to create all kinds of opportunities for another currency or other currencies in that system. Also, they can reduce barriers to encouraging more Chinese and international firms to list on U.S. equity markets, which would incentivize China to support the stability of dollar-based global financial markets. The other thing that's important, Rolake, is that the U.S. Congress can empower the Development Finance Corporation, that's the U.S. Development Finance Institution, to do significantly more to emerge as a credible source of capital for emerging markets and lower and middle income countries. China and Russia have advanced their de-dollarization efforts through multilateral development institutions, and they're definitely giving more, spending more to support developing economies. And there is no way these economies are not going to put their currencies in these accounts of these countries. So the US can counter this by doing much more in development finance. Then, of course, countries and companies comply with U.S. sanctions because they want to retain access to U.S. markets. So a strong U.S. economy is the most effective and credible tool for countering adversaries seeking to undermine confidence in the dollar. And the U.S. can move to strengthen its economy and be more sensitive to the costs of the economic warfare it is waging.
Yes, indeed. And, we've talked a lot about the US, Russia, and some of the other bigger emerging markets. But there's a question of back here in Africa. And, this raises a really interesting question of whether African countries should not be considering their own reserve currencies outside the yuan and the dollar. We've heard, over the last decades or more, attempts to get, regional economic and monetary integration within the continent, talks of a single currency. What are the prospects of a reserve currency emerging in Africa, in your view?
Well, ECOWAS has been pursuing a common currency agenda, the ECO, to reduce barriers to doing business across the region and increasing trade overall. But there are gaps in the required macroeconomic convergence across countries for them to be able to agree to move forward. And with COVID and all kinds of delays, I understand implementation is now tentatively set for 2027. So that's neither here nor there. But analysts are saying the region is to build trust and grow investments first, putting the continent on sounder economic footing, also moving faster with, like you said, opportunities in the Africa Continental Free Trade Pact. That's a landmark trade agreement with a comprehensive scope that includes digital trade, investment protection, and eliminates a lot of the barriers to trade. But having said that, developing nations suffer greatly under the weight of borrowing as they seek to stabilize their economies and prop up the value of the local currencies. The cost of servicing dollar-denominated debt has seriously dented living standard amidst a deteriorating global economic landscape. In Egypt last year, they issued the yuan-denominated debt to raise funding in the Chinese bond market for the first time. So as many are getting more alarmed by the high cost of borrowing in US dollars, many I think are going to shift out of that currency to more maybe the Chinese currency as they borrow more from China so that they can get better stability for their own local currencies. But Africa also is importing larger amounts of goods and services from China than any other country, and so it's cost effective to also borrow in yuan and in dollars. My sense is rather than the move towards an African currency in the medium term, I think what you're more likely to see is shifting in the mix of their reserves more towards China as we get more increased trade and capital flows with China. In the medium to longer term, depending on progress with macroeconomic convergence, the ECO definitely has its appeal, but not in the short term.
Yes, and you make a very good point there, because there's already quite a lot of private trade deals and contracts that are done between African currencies such as the Naira and the Yuan that go on quite a lot. Just another question around the issue of the African continent and regional economic and monetary integration. Of course, the convergence criteria is there, but we've got the cautionary tale of moving towards economic union, as we saw with the UK exiting Brexit, because in the long term, economic interests weren't aligned and potential political interests. With the differing pace of growth across the African continent and the different approaches to monetary policy, there is one commonality, which is many African countries are facing huge levels of debt, and many are struggling to service this debt. And a lot of that comes with conditions from global Bretton Woods institutions like the World Bank and the IMF. Could the debt crisis, in your view, become one of the single biggest, largest triggers for the African continent, for instance, to move significantly away from utilizing the dollar as the main form of international trade? I know that might be a tough question, but I wanted to get your thoughts.
Well, I think it would be certainly a consideration, and it's already happening. Just like I said, Egypt is moving more towards China. Of course, South Africa is moving towards China in terms of debt and in terms of its reserves. But you have to be very, very careful. The reason why currencies are put in dollars is so that they can be sure that they are going to have their money back. And because of that, yes, the debt is significant, but it's a problem they have to work out. One thing I must mention, though, the fiscal discipline for African economies in my view, has significantly improved, despite the fact that, yes, there's a lot of debt. You have to remember that the last 3 years have been extremely difficult, extremely difficult. Africa is not like Europe. Africa was already facing a lot of debt and fiscal challenges even before they went into COVID and the slowdown and all the issues. So that obviously made the situation more dire. So I think, yes, these barriers are there, but that should not discourage Africa from integration, from pursuing the Africa Free Trade Pact, and also maybe even their own currency at the right time. The challenges with the EU are really very, very, very different. For Africa, we really need to trade more with each other, significantly more too.
Yes, indeed, and currency convertibility within the region will be key. I want to talk about another region, which I know you have some opinions about. That's Latin America, in the Americas south of the US. What are the dynamics around this issue of de-dollarization, and do you see prospects for moving towards a reserve currency as well within that region?
Well, the two largest economies, Brazil and Argentina, have been talking for a while, but critics have likened this move to opening a joint bank account with an unemployed friend who owes everyone money. That is Argentina. So the idea of creating a common Latin American currency, yes, it was first touted by Gilbert Gallipolos. He was an economist working with Lula da Silva, former president of Banco Fato, when he was president from 2003 to 2010. So da Silva likes it, and similar to the euro, it would contribute to integration and strengthening the monetary sovereignty of the region. And there are a lot of preliminary talks. It's not a new idea. There was 2 decades ago, in 1987, the talk of the gaucho, they called the currency then, but that didn't happen. The reason why these things don't happen, and people talk about them, is because there are issues, and economists are skeptical of a currency plan with Argentina, which is seen as one of the most protectionist economies in the world, with the central bank not as independent as it needs to be, and of course accustomed to price and currency controls. And Rolake, as you know, those are no-nos if you're going to have integration. And most analysts are of the view that, yes, intentions are well-meaning. There's genuine problem of dollar shortage in Argentina. There's need for a solution to finding the currencies apart from the dollar, but the whole idea of currency union remains very, very aspirational at best. But Latin America will continue to seek alternative ways of settling trade without using the US dollar. I think, just like we said in other continents, that would mean maybe moving them increasingly towards China.
Yes, indeed. And, you know, the issue of digital currencies is also interesting. I wanted to get your thoughts. There was a story we didn't get time to talk about, which was that a Bitcoin platform whose clients were mostly Nigerians had actually collapsed. But in this whole talk around de-dollarization, what are your thoughts on how digital currency or cryptocurrency might even play a role in this discussion?
Well, indeed, there are countries that have accepted cryptocurrencies, but they are not the significant, the more significant countries in financial markets. And my sense is the bank's digital currency, which we thought would pick up. In China, yes, it has. In Nigeria, we have. But you can see that markets have not paid as much attention to it. That just tells you that they're not going anywhere as far as replacing the dollar is concerned. But just like I said, there is a reason why the dollar is the dominant currency. The governance, the robust institutional framework and support for it is something that is going to be difficult to replicate with digital currency and with cryptos, even though it'll always be there. But the more cautious plays would always look at cryptos, for example, as too dubious for them to get into it, despite the fact that they're now being accepted as securities. So these are not easy transitions. When you are running a treasury of a country, where you put the money of the country is a very important decision, and you are not going to play games with it. Yes.
Yes, indeed. Thank you so much, Bode Oshosami, a Rise business analyst, for that amazing deep dive on de-dollarization. Speak soon.